We're back with another episode of Bullish Chips, where we usually talk about chips and only chips, but today's going to be a little bit different. Today, we're doing a little breakdown of how we set up our charts to come up with our very precise entries and exits for not only our scalps and day trades, but our mid and long term trades as well. Make sure you hit the subscribe button and hit the notification bell so that you're notified for whenever we release new videos such as this. We release new videos every night throughout the week and once on the weekend, so usually 6 videos a week. But we also release bonus content like this from now and then, diving deeper into certain concepts or questions that followers have brought up to us. So make sure you hit the notification bell. That way you're notified when our videos drop, and you can go ahead and check those out as soon as they are released. Make sure you're following us on X as well at Bullish Chips. We do give real-time entries and exits for scalps and day trades, as well as mid and long-term swing trades as well. We also offer further commentary throughout the day, just to give further information to folks to help in the trade throughout the day. Make sure you like the video if you like what you see here. It helps spread the word about this trading strategy, this trading method. It's proven, it's repeatable. It's not just for charting SOXL. This same method works for whatever ticker you're looking at within the stock market. If you can take this method to another ticker and it doesn't work, I'd love to know, and I'm confident that we're not going to find one out there. So let's go ahead and get into the charts. That's what I know what everybody's here for. Just a reminder, we're not financial advisors. We don't offer financial advice. This is just our view of the charts. But again, this has been proven over the years to work consistently. And again, I've used this method on many other ticker symbols other than SOXL. So just looking at the chart here, we talked about in our video with the basics of how to set up our charts. If you're not familiar with that video, check out the link in the description. We'll also put a tag up top that you can click, which will take you to that video. And it just gives the basics of how we look at a chart from a wide angle view down to a much narrower view. Talking about broadening formations and the strat, which is the base of our trading method, which we layer other things on top of. So if you're not familiar with the strat, we did go over that in that video. There's a link in that video to this PDF, which has the exactly what the strat is and the reversals and continuation patterns that you can have, as well as broadening formations. I'll go ahead and put the link to this PDF in the description of this video as well. But we in that previous video we talked about how to go from just your blank chart to labeling it with broadening formations. This is from a pretty high time frame perspective. We have yearly broadening here in white, quarterly broadening formations here in yellow, and monthly broadening formations here in green, right? And so these tell us, give us a little bit of precision to know where price action has come from and where it is most likely to go. So you can see that price action falls within these broadening formations, right? And even when it peaks below one of them, it hits another one and it respects it. So we talked about how to set that up from the longer term perspective. In this video, we'll use the same order. We'll talk about high time frame first and go down to low time frame, which is scalping and day trading. But for right now, since we didn't really talk too much in the last video about other basics other than setting up the broadening formations and understanding what the strat is, we can talk now in this video about how we can use these two basic things, the numbering of the candles, which is either a 1, a 2, or a 3, and these broadening formations to understand where we may go, right? So if we look at things from a yearly perspective, this particular stock SOXL, it's only been around since 2010, so we don't have a whole lot of information on the year. But what we do know is that we had a 3-1-2, and it did not complete the strat, right? The top of the two is up here. Let's go ahead and bring out the chart without the broadening formations just to make it a little easier to see. So we can see we had a 3 where the price action in this candle went above the high of this candle as well as below this candle. So it's a 3, or what other people refer to as a bearish engulfing candle, followed by a 1, or what people call an inside candle, where price action never made it outside the price action of the previous candle. So the price action here never went below or above this candle. So that's a 3-1-2 reversal, right? So from a strat perspective, that would be a 3-1-2. The entry from a yearly perspective would be the high of this candle. So once we are in 2024, once price action got above the $32 level, you could have entered longs, leaps, bought shares, whatever, took a long position that price will be going higher, and had a target of the high of this candle. A 3-1-2 will trigger at the high of the 1 and at the high of the candle to the left of the 1, which in this case was the 3, if it's going to complete its strat. It's a long way to go, and it almost made it, right? But it did reverse up here, and we'll see that once we get down to lower time frames, we'll see a strat reversal in there. That would have told us that price action was coming back down. So, but for right now, we're just on the year perspective. So that's the only real strat reversal that we've had on here, because it's just been basically since inception upward price action. We didn't get our first real major downward price action until 2022, which most people remember. Everybody had a downward action pretty much that year, bear market year. Last year, although it was a positive year and it did have pretty good movement, the year before, which was 2022, that was so big that it couldn't do anything but remain inside. So we got the 3-1-2 reversal. We'll see that on the lower time frame, the reversal here that showed us we weren't going to get to this the top of this, the magnitude, what they call, of this strat, and we would have known to get back in, going to the downside. Now, if you wanted to wait from a yearly perspective, you could have wait for price to come all the way back down, and then you could have sold at even right here. If you had options, depending on your expiration, it would have had some theta decay. But if you wanted to wait for it from the year perspective, you could have waited for this year to close out as a failed 2 up, right? It failed. It did go 2 up, but it failed because it closed red, and it has this big wick. And in the strat world, we call this a shooter. But it's basically an inverted hammer that doesn't have a very big body. It's a very bearish signal. So we would have known that we would have wanted to get puts, or we would have wanted to get sell calls, or sell your shares, or short the market if price action got below the low of this candle, because that would give us a 2 up, 2 down reversal, which actually is part of a bigger 3 candle reversal, which is one of my favorite to play in the strat world, which is the 1, 2 up, 2 down. It gives you a very clear entry and exit. The entry is the low of this failed 2 up. The exit is actually the low of the candle to the left of the 1. So we're back to this 3 again. So the target, or the magnitude, would be the low of this candle. And you can see from a 2 up, 2 down perspective, it did reach its strat, right? So if you go 2 up, 2 down, just a traditional 2 up down, the entry is the low of the failed 2 up, and the magnitude, or the target, is the low of the candle to the left of the 2 up. So it did fulfill that strat, and it tried to complete the 1 2 up, 2 down by going to the low of this 3, but it didn't quite make it there. So in April, we had a lot of fun. We used money that we got from puts and selling calls, along with just other cash that we had saved up, and we bought leaps down here around the $9 and $10 mark. We did get as low as 6 something, but we waited for the reversal back up on the lower time frame to get confirmed before we got in. So we got in around the $9 and $10 level with buying shares and leaps. Took off our calls that we had sold if they weren't expired already, and we got ready for the push back up, which we've experienced, which we can see on the quarter time frame, which will bring us down and give us a little bit more to work with from a strat perspective. So I can describe the strat just a little bit more. So one of the other strats. So we're looking at the quarter chart here. We're down on the quarter chart. We talked about the 1, 2 up, 2 down. You can have, we talked about in the other video, you can have what are called combination strats, which is where two candles combined will equal the one particular candle that would be the reversal. So here we have like a 1 failed 2 up with a combo 2 down, because it had the failed 2 up, but it took this candle and this candle to trigger the reversal strat, right? So 1, 2 up, 2 down. The trigger is the low of the 2, and it took till this second candle to get down to this level. And the magnitude would be the low of the candle to the left of the 1, which is down here, and you can see it did reach that magnitude. So that's an example of when a strat does reach its magnitude, as opposed to the ones we were talking about where it doesn't. The reversal strat here on the lower time frame than the year, just from a quarter perspective, was a 3, just a 1 bar reversal strat. So it tried to get above, it did get above, but it rejected price action there and just pushed all the way down. So once you go 2 up and fail that, and you come down and you reach about the 50% mark of this previous candle, that's when you know, okay, we're probably, there's a good chance we're going to make a 3 here. We're going to go test the other side of this price action, and that's what happened here. So that's the reversal you got both in 2022, the top of 2022, as well as the top of last year, 2024. You can see right now the current strat we're in is a 2 down, 2 up. So you got a failed 2 down. So again, price action went down, but it pushed up so much that it not only came back to where price opened for the quarter, but pushed above that and closed green. So we have a failed 2 down, which is a bullish signal and so we knew that if we want to go long, you can just wait for price to break above the high of this candle, and you can start to look for the magnitude of a 2 up, 2 down, which is the high of the candle to the left of it, which would be up here. And again, that's all broken down in the PDF that we made available in the description there. But along with that, it turns into a 1 combo 2 down, combo 2 up if it reaches the high of this candle and continues higher, right? So we have the 1, these two candles combine for a 2 down, and this candle, if it were to make it during this quarter up to here, would be a 1 combo 2 down, 2 up. Now, if it takes till next quarter to reach up here, then we would have a 1 combo 2 down, combo 2 up. So those combo 2 down, combo 2 up, just make it a 1, 2 down, 2 up, right? And then the magnitude is the high of the candle to the left of the 1, which in this case is all the way back up here at the 70 level, right? So a long ways to go, but that's the strat that we're in currently, right? Now, let's see, the high of this candle was 25.84. We're currently at 25.71, so we're just slightly below the high of this candle, meaning the strat is no longer in force, right? So if you had entered here, you would have had your stops set here, or slightly lower if you wanted to give it a little bit of if you were willing to give up a little bit to see if it would bounce and go back up, but that by strat rules would be where you would exit at the high here when price action comes back below this high, and you could re-enter once again once price action gets back above and the strat is in force once again. So again, that's just a little bit more about the strat. We'll just look at one more here, a 3 1 2. So we have the red 3, which is going down, the 1, which is an inside bar, basically indecision, and the indecision was broke to the upside. So once that indecision is broke, the trigger is here, the high of this candle, and the magnitude or the target is the high of this candle. It didn't make it in the first candle, but it made it in the second one. So it was a 3 1 combo 2 up that to reach the strat. And you can see here, it doesn't always just stop once you reach the magnitude of the strat. This particular one turned into a continuation strat, so a 2 2 2, and continued up until we got some more indecision here with the 1. So we got a 2 1 2 up again. Now the 2 up failed, and we're back into that strat we were talking about earlier. But that just shows how a strat doesn't have to stop. The price action doesn't have to stop at the top of a strat. This is just our reversal. It's telling us price is reversing, right? And so we know that we can get out here. We should expect to get here, and we can get out totally, or we can scale out some here and leave some to see the continuation. But this is just telling us where the reversal is. So the strat is very good at telling us. It's kind of telling us the future, right? And for 1 bar to the future, it should always be right? Like this is a reversal. It went red 3, so the next bar should go 2 down, and it went 2 down. Now this was the 2 down, 2 up reversal with the failed 2 down, so the next bar should be up, and there it was. It's up. So the strat shows us the reversals, right? At least that's what I use it mostly for. Some people will get in on like 222 continuations. If I'm in and it continues up, I stay in. I don't usually add from a long-term perspective. I'm sorry, from a short-term perspective, because you never know when it could reverse. If I do add, I try and get longer-term expirations if I'm buying options, or if I'm buying shares, I just buy here and then we'll set a stop with those. But those are a little bit harder to judge, how much further they're going to go until you have the broadening formations in here. So if you do have the broadening formations in here, you know that, all right, it reversed here off of this, and it should go hit up here, and that's what it did, right? Because there was actually there wasn't an earlier broadening, right? But at that point, if you ever got a reversal down and a push back up, you would know that it's trying to go back up to the top of this broadening formation. Let's go ahead and break down to the month now. That'll give us a little bit better view of these reversals on the higher time frames that we were talking about at the beginning of 22 and the middle of 24. So we can see here, once again, it's just this 22 was just brutal at the beginning of the year. So that one, you just had to, be ready to get out at the bottom of this candle and just buy puts on the 2 up, 2 down reversal, or I'm sorry, 3 reversal candle here. But it came pretty quick. Same with the middle of July. A lot of times you'll get a little bit better setup, like here in 2019, right? This is even before. This kind of shows how it's. You don't want to say that price action precedes news, right? But we didn't hear about, what we heard about until March, right? But in January, it did give a signal from a monthly perspective, because we got the 3 failed 2 up, and another one of my favorite reversal patterns is a 3-2-2, right? Whether it be a 3-2 down 2 up or a 3-2 up 2 down, because it gives you a very clear entry and target, right? 3 failed 2 down, you enter if price gets below the low of this candle, and your target is the low of this candle, and that's what it did. Price tried to push up, it didn't accept up here, just like it didn't accept up here, showing with this big wick showing it didn't accept. And once it got down below this price action, or below this price level, that's when the momentum came, right? So you entered here, and you could have exited here, left runners. Now, we didn't expect that big drop to come, but you should have expected a drop at the beginning of 2020, right? Before any of the madness started, you should have expected a drop, right? If you followed the strat, which a lot of us did expect. Not that big of a drop, but we were ready, right? I had sold shares here. I wasn't as savvy with selling calls in 2020. But I knew about them, but I didn't have the guts to pull the trigger at that time because of the year that we had in 2019. I do remember that specifically, but I remember selling my shares and then buying puts through the 3-2 up 2 down, and I thought we were going to reverse here. I sold all my puts, and I ended up having to get back in on the weekly time frame. I got lucky that I paid attention, and I was looking for it, but I was able to get back in. I didn't really believe that we were going to go below because of how good a year we had here, but I was able to see the reversal again on the week perspective, and I got back in. Now, I didn't ride it all the way to the bottom because we didn't really know what to expect at that point. The market was a different place at that time. It was way different than any other market I had been playing before in the previous years, right? But it just goes to show that we were ready. We were making money right here when a lot of people were panicking and selling. Right, I had sold pretty close to the top. Once we got the failed two up and price action came back in here, I sold a good portion of my shares that I had bought around this area and higher up here. I unloaded a little bit more once price action went below this two the next month. But I held onto to a good chunk of them because they are longer term investments. But you do want to keep your cost average down. So I did sell off the higher ones. I kept my main chunk of shares and then started buying as I saw price breaking down. It's like, okay, now we're going into bearish territory. Let's buy, because these, especially when you're buying quality stocks, they were at a very big discount, and we got paid back off, many times over in the years to come. So, or in the following years. So, that's just how you can use the strat to be ready for things that you don't even know are coming, right? It's that's why the strat is so useful. It's not using past indicators, right? Like it's not using EMAs or SMAs or MACD thing. It's not just telling you about past price action, because that's what those indicators tell you. The strat tells you where there's a high percentage chance that the price action is going to go in the future, as opposed to what's just happened in the past. So we can see that they have been this broadening formation that was formed here on the monthly time frame for this low to this low. It was respected here in the drop of this April. Another broadening formation had already been formed last year to this downside before we even had this downside action this year. So this broadening formation combined with this one kind of makes it both a magnet and a solid support point, right? So like, if two broadening formations are going to one area, that's probably where price is going to go, right? But at the same time, once price gets there, because there are two broadening formations, it should be a solid bounce point, right? Regardless of the fact that it was so low in price that it kind of had no choice but to bounce. But if you look at any other chart of any other stock that didn't come down this low, right, then there are broadening formations, I can guarantee, that coincided at the level that we bounced from in April. So right now we're just fighting this downtrend line. We don't put a lot of weight into trend lines, even though that's kind of what broadening formations are, right, in a way. But again, just like broadening formations, I wasn't buying right here when it was touching this broadening formation. You still have to use the strat to wait for the reversal, right? So we had to wait for price to close this month and then break above here before we entered longs. Now it was a little different because we used the week chart to enter, but it's not like price will only go to this broadening formation, right? Sometimes they poke through a little bit, but it's a guide to know where we should see some type of bounce, or if not a bounce, a fight over price right at that point, right? That's where either bears are gonna dig their heels in and defend for their lives, or get run over, or vice versa. If we're up the top of the charts, it's either that's where the bears are, if we're at the bottom of the charts, is where the bulls are digging their heels in and saying we're not going any lower, right? So they're just guides, right? And we use the strat as our actual horizontal levels for entries and exits, right? We don't use diagonal levels for entries and exits. We only use horizontal levels, right? So that's from the monthly perspective. We can see here from an even lower time frame perspective, if we go to the week, it works out the same, right? If we bring this out, so like if we were to take this broadening formation, there, if we had this, if once price action went here and came back up and this broadening formation was formed, that was another, we'll just change this, make it the week's color for continuity, don't confuse anybody, but that was another weekly broadening formation that coincided with this monthly broadening formation that had been back here, and this monthly broadening formation here that was started way back here. All those three levels coinciding, again, a magnet, yet a stronger bounce point, right? So that it just shows how these broadening formations all start to line up with where we're going. And you can see this broadening formation, price action went up to it here, right? This was started here, this high went to a low, made another high, then went low. So that made this broadening formation right here. If we activate this, we can see the two nodes that it's off of are these two. And then in the future, it ran up against this weekly broadening formation that was formed to reject and go back down, right? So just how we can use the reversals, right? Study the worksheet, study the reversals, right? So you know them, and there's only 6 reversals, so it's real easy to remember, and you'll have your favorites, but just remembering those reversals and pairing them with where broadening formations are, that's your first guide to setting your precise levels. Then using the actual strat reversal levels as entries and exits. Let's go back to the month, right? Like here we have, take these weekly broadening formations off, right? We had the failed 2 down and then a 2 up. So the 2 down, 2 up, the entry is here, the exit is here. It doesn't always make it in the first candle, but as long as there's continuing price action, right? If we get down here on like the day, there's probably a lower high. Yeah, this is where that little dip was. There was the lower high, lower low, that then made a lower high with a higher low here, starting an uptrend, which once we got above this lower high, made the higher low and a higher high up here that continues the uptrend, right? So we knew from the month perspective, right, that wick right there was that little pullback we talked about on the day chart, where there was a lower high, lower low, followed by a lower high, higher low, that then turned into the higher high, right? So that 2 down, combo 2 up, it made that strat, right? So it would then put that into a combo 2 down, combo 2 up, which the entry was here, the exit here, but since it's a combo, the new entry is here, right? So you'd leave your runners for price action above this level, targeting the high of this candle. And if price action came back below this level, you could sell the rest of your runners that you had, keep that profit. Or if you had entered new contracts here, then you would have, bought the contracts here and set your stops here so that you would stop out at even, or, slight theta decay, because we should be buying good contracts, right? Not way out of the money with short expiration dates, as close to the money as you can, if not in the money, and as far as expiration dates as possible, right? That gives you, SOXL specifically gives you a great delta theta for that, but any stock should give you a better delta theta for the more time you have and so closer to the money that you are. So it gives you the time to ride it up and ride any pullbacks in case they do bounce, and you can continue on, right? Like, so here we've had a pullback, right? Price action rejected off of this monthly downtrend line, and then we have our bounce. So you could have either had a lower stop down here. So if you didn't want to just stop out, have such a tight stop, you could have gave yourself some room. You get the bounce, and then we continue with this combo 2 down, combo 2 up, right? And this here turns into a 2 down. If this next month starts going up, that's a 2 down, 2 up as well, right? If this month is just a big month and we go 2 down and then 3, then that's just even more momentum. It shows more momentum. If we've got a big green 3 in the same direction as this, that's just showing a lot of momentum. It shows it tried to pull back, but it was rejected and rejected hard and pushed not only up but back above the level of the previous month. So that's the combo 2 down, combo 2 up. So the target would be here. If it reaches up here, that puts us in a 3, combo 2 down, combo 2 up, which is just a 3, 2 down, 2 up, which again, you have a very precise entry and exit. The entry is here, the exit is here. So there's not a lot of magnitude between these two levels, but that's still a trigger and a target, right? So this is precision trading, right? And this shows up in the notes that we create, right? So we have here on the year our triggers and targets mapped out. And we saw that on the year, this is why we were ready, right? Because it went 1, 2 up, 2 down on the year. So when price earlier this year went below 23.50, we entered puts, we sold calls, and we set up targets that The first one was hit. The magnitude was 621. That didn't quite get hit. And then we have our next extended target past the magnitude if it were to go past the magnitude, right? But this is precision trading right here. We know once it hits 2350, we're selling calls and buying puts. Once price hits 919, we're either, selling the puts that we had if we still have time on them, or selling most of them and leaving some runners to see if we hit the magnitude, right? It's whatever we choose at the time, but we have the actual levels, right? They're not just around this level, around that level. They're pretty precise. And the more you look at these charts, when you incorporate the strat, it's amazing how precise price gets to, right? So we have that for the year, we have it for the quarter, we have it for the month, we have it for the week, we have it for the day, and even for the 4 hour for this short-term trading, right? And we're slowly working our way down there, right? So let's go back to the charts. And so I think you pretty much have the concept of using the strats with the broadening formations, right? Let's get down to a more day and scalp trading, a look at day trading and scalping, as well as short-term swing trades. So the first thing we want to do is draw, after this run up, we had like 7 straight weeks of green action here. We had a run up where we peaked out, where was it? Here, we got a high, followed by a low, followed by a higher high, but that higher high was followed by a lower low, which creates a broadening formation, right? So this is on the daily perspective, right? So we're getting a little bit more short term here. This is on the daily perspective. So we continue with price action. We take this high, and we got another higher high. Now it wasn't as high, but it was a higher high, and then we get this low, and we got another lower low. Again, not too much lower, but it was another lower low. So that showed that price action was constricting, right? It was condensing, it was consolidating, right? So we knew from that point we kind of had a range. Instead of a broadening formation to deal with, we had a range. And you can see how that range played out. And we knew it was going to be a range because of this, previous week or two where it kind of bounced around here just in a range as well, 24 to 28. And once the broadening formation got basically as tight as it could get without making a downtrend line or an uptrend line, we knew price action was going to condense, and that's what it did. Excuse me, that's what it did here. And what we can do is add a little bit more context to the chart by bringing in the year, quarter, month, and week flip. So the flip, what we're talking about is where does the month go from red to green or green to red. So actually, let's get back to the week chart. If you look at the upper left-hand part of the chart, we have the time frame continuity here, and that's what we're talking about from the flip. Does the week flip red? Does the month flip red? Right. So in order to know when it flips, where it flips red, we have to know where the opening price was for the week. We have to know where the opening price was for the month, opening price for the quarter and year. Right. So let's go out here for the year, and we'll just chart out the opening price. Oops, I got the wrong thing here. Right. So this is the opening print right here. We'll just label this with a Y, right? We'll give it a red color. That way we know where it is. So that's the opening print for the year. So we know if price action gets back above 28.13, that flips the year green, right? So let's go to the quarter and let's map that out. Excuse me, map that out as well. So this quarter opened here. So we'll just call this quarter. Give it a Q and make it red just so we know exactly what it is. It's the flip. And then we go to the month. And the month opened here. Oops. So we know this is the month flip. Label that with an M. And then since we're going to talk about day trades and lower, we would talk about the week as well. So the week opened here. Edit. Make that red. And we'll give this the week. Okay. So that explains why the week is green, the month is green, the quarter is green, and the year is green. Again, if we're looking at this upper left-hand part of the chart, that's our time frame continuity: week, month, quarter, year. We are this price action closed here, right? So the price action is up here. We're above the week. I'm sorry, above the month. We're above the quarter, and we're above what was last week's open, right? So that's why the week, month, and quarter are green. But we're still below this year, which is why the year is red. And the reason why I bring those up is because if we come down to a daily perspective, we can see how those levels are respected. And actually, let's edit this left extension on just so we can see. Edit left extension on. Edit left extension on. Oops. Right, that way we can see with more clarity how these levels have been respected, right? So if we're looking at the month view, that starts right here. This is the first. So you can see how price tried to get below the opening print, and it rejected. It's back above. It tried to go below again, and it was, it's support. This flip, it doesn't want to flip the month green, so it's support. That's the same as what the quarter was doing. It's acting as support. It's peaked through here a couple times. Once the quarter got going and the new quarter started, it tried to push down into last quarter's action, but it's using it as last quarter's high, or this quarter's flip as support, right? So it's also using last year's high. I'm sorry, this year's flip as resistance. It was resistance here, here, here. And so that's why these levels, it's good to have these levels out here, because they're another, not only are they another level, but they're a horizontal level, which you'd like to put a lot more weight in as far as what you're trying to follow on the charts, as guides, right? So we can see, going back to, let's see, 2025 starts here. So on the year, it started out green, it used it as support, but once it lost that support, it was now resistance, right? It did break above, but then it was resistance again. And from the year perspective, that's all she wrote for that amount of time till we got back up to it now, and that's again showing as resistance. So we've got to flip that back as support. So I bring that into play also because if we go down to an even lower time frame, you can see how on a smaller time frame these connect as support and resistance. That can draw out a trade through the day, right? We can even get down to the 5-minute time frame to really look at some of these. Let's go over here. It used it as support almost to the cent. It's used it as support, used it as resistance. But then within this being resistance, it did have this as support. So you could see it bounce around in here, right? And you knew, don't get involved while it's in between these two. Wait till it's either below or above, right? And these are very, very, very precise levels, right? Look how they're bouncing almost to the cent on a lot of these, right? So again, this really comes into play. It gives you a way to get these very, very precise entries and exits. The last thing, well, I won't say the last thing. Another thing you can bring into play, let's bring up the week chart just because we want to be able to fit a bit more on here. I don't know why Thinkorswim does that, but let's look at just 2025 through, oops, we want to get 2020 in here as well. We can see that pre-2020, price was pretty restricted. Once 2020 came in, the money started flowing, the market started acting different. So one thing I like to do is I like to compare today's price action to the new market that we're in, we could say, right? The new market ever since 2020. And to do that, we can take let's start from up here. We can take this high from 2021. Well, it was really the first week of 2022, but we'll call it the 2021 high. to the 2020 low. Let's get the right Fibonacci's in here. We'll set it white so we know what it is. We can see how price action respects these major Fibonacci's all the way to this day as well, right? Oops, that's not what I'm trying to do. Right? It used this 38.2 as support. Support, support, support. It did break through, but it came back in this candle, right? So it was support, support, support until, it was starting to use it as resistance. Once it starts to use it as resistance, you got to know, hey, we're probably heading down, right? Or at least to go test some lower broadening formations. You may not know it's going all the way down here. So, you could have had a weekly broadening formation from like, oops, let's get the right giant candle, from like here to here, and thought, it may be resistance here, but this support will hold. But you also would know that if it doesn't hold this broadening formation, we should see further downside action. So 38.2, 50, and 61.8, those are very strong Fibonacci levels, right? We'd keep the 23.6 and 78.6 out here just because, you can see they're still being used to a point, right? That was resistance there, resistance here, at least at one time before it broke through and tried to test the 100, right? But you can see how price action is respecting these major levels that are from 2020, right? So from all the way back here, from 2020 to 2021, the Fibonacci's of that are still being respected to this day. So that's why a lot of times I like to put those out there as well. Don't usually leave them out there too long because it kind of muddies up the chart, especially when you've got broadening formations. The last thing you can do is, oops, that's not what I want. I want to stay on the week. The other thing you can do is you can take the most recent major move, right? So in this case, that would be the 2020, basically 2024 run up, right? This was like the base of 2023. Yeah, it started out below it, but this was a base here and then was support here before the run. So if we take this run, right, to there, again, we need to add these little fibs. We'll make it white once again. Right, you can see it's respecting these levels as well, right? This support, resistance, and what you'll find is these are matching up a lot with the 2020 levels, right? This just on a little bit more compressed scale, but I think the 78.6 of the 2020 matches up with the 23.6. Actually, let's just take a look and see which ones do. We'll just go from here to here. And we can see, yeah, 61.8's pretty much overlap. The hundreds are close. And you've got some close stuff here, right? But just another piece to bring in. It's not something we're going to leave up there, right? Because it kind of muddies up the screen. But just something else that when you're zooming out to kind of keep track of as well. Let's get back down to the lower time frame. So we can see how those horizontal levels play in. One other thing that you can bring into play, I said I wasn't going to zoom back out, but let's zoom back out for a second. And let's take the fibs from last year, and we'll take out all these extra ones. What we're looking for is the high, low, and 50% of last year. So since our year indicators are white, we'll just change this white. So we can see this is last year's low, and we actually call this year so we can distinguish it. And let's change the, let's see, the 0 is down here. So let's change this to dashed short. So the low is short dash, the 50% is the long dash, and the high is a solid line, right? So you can see this is the low of last year, this is 50% of last year, and that's the high of last year. If we break it down to the quarter as well, and you'll see how all this plays out here in a second when we get down to the smaller time frame. So edit this, we'll take out all these extras, we don't need them. and we'll make it yellow because if you watched our previous video, you understand our color coding system. Again, link to that video is in the description of this channel. Actually, we need to change these as well to small dashed and long dashed. So we can see this is last quarter's low, last quarter's 50%, last quarter's high. Last one we want to get in here is the month. That's not the last one, but let's go month. And again, it doesn't take a lot of time to do this, so don't be afraid to do this. Month, all our colors for the month are green. Again, if you're not familiar with our color coding, watch the video in the description. Right, oh, and I forgot to change this to a short dashed, and this is just so we can identify what these levels are on a small time frame without having to zoom out. And you'll see how these levels come into play. This is the last one I've got to do. I'm just going to do the week as well, because these do come into play and make a big difference. Oops. Week. That's that. And we do the week purple. All right. Oh, God. Keep forgetting to change the... That's that. And that is that. Okay. So we've got these mapped out. Let's get down to the day and lowered. Right? So we can see how last month's 50% kind of lines up with last quarter's high, which also kind of lines up with last week's 50%. So you can see that that's why that was resistance this week, right? Friday, Thursday, Wednesday, Tuesday, Monday, right? Resistance, resistance, rejected, bounce back up, resistance. It tried to break through, but got stuck on this high of last year, right? So we can use these as different levels as well when we get into the scalping, right? We come into the 4 hour. You're trying to trade on the 4 hour level. Once again, it gives you plenty of guide, right? You're going to get your support from your week and quarter flip. You're going to get major support from right here because this is last month's, the month's flip, last month's low, and last year's low, right? So that should be a good major support. And you can see it did go through it, but that's a big wick, right? It wicked down to this week daily broadening formation that was formed here, right? If we activate this, you can see the two nodes that came off of are right here. So this broadening was already here once price action was coming. So you should know that, along with these levels, you've got the daily broadening. This should be a good support area, and that's where we got our bounce to get our higher low and then a higher high to start the daily uptrend, right? So again, these levels really come into play, and you can see how they came into play chopping around here, right? Here's our monthly downtrend line that combined with our weekly broadening formation is a lot of resistance, right? The weekly broadening formation combined with this year flip, resistance. Then just the year flip on its own, resistance. Combined with last month's high is resistance again over here. We didn't even get up this week up to last week's high to see if that would be resistance. The 50% was resistance enough, right? So it's very easy to get precision level trading with this system, right? So let's break down scalps and day trades. To do this, we incorporate, along with the broadening formations and any monthly, quarterly, or weekly Fibonacci that you want to put out there for the 50, 100, and low, then you can have those out there as well. But combined with the strat and the broadening formations, we use the previous high a day, previous low a day, overnight high, overnight low, and the opening print of the current day as horizontal levels to guide us for our scalps and day trades. So let's talk about that for a second. Let's go in here and let's just first map out. Let's say Friday has not played out yet. Say it's Thursday night, right? And we're setting up our charts. So we've got the 4 hour chart here because what we're doing here is putting out what I call my quote unquote 4 hour markers, right? So our 4 hour markers are the low, the trigger to the downside on for a 4 hour strat. So we'll call this down, and we'll mark it gray because that's what we use for 4 hour indicators. All right. and then the high of the second 4-hour candle of the day of Thursday, right? So this is up, the trigger up. And this will make more sense when we get into our notes. You'll see here in a second. But say, say Friday wasn't here, we would know that a 2 down, 2 up triggers here, which is why this is the up trigger. From on the 4-hour perspective, this line indicates where a 2 down, 2 up triggers on the 4-hour. So we would enter once price clears 25.15, and we would have a target of the high of this candle, which is 25.88. It got stopped a little short here at 25.84, which is last quarter's high. So we could expect resistance before we got to the full magnitude and been ready to get out at the top of Friday. So now that brings us to marking the previous high a day. So this price level, we'll call it PHOD for previous high a day. And if you followed our previous video, if you're not, this is not familiar, but it's a orange solid line. And we'll go to the low of Thursday. We'll make it an orange solid line, and we'll call it previous low a day. Okay, so here's the first 4-hour markers, right? We got previous low a day and the trigger to the downside. They happen to be the same things. That's why they overlap. You can't see the down behind there really, but it's there. Then we have the trigger to the upside and the previous high a day, right? So the other two that we said we mark out are the overnight high and overnight low. So let's just go here. And again, we're imagining that Friday hasn't happened yet. So let's take Friday out of here. So we're taking Thursday, the overnight between Thursday and Friday. The high is here. And we'll mark that as bright blue and just with an H. Okay. And the overnight low is down here. Oops. And we will make that blue like the overnight high, so we know overnights are blue, and this is just an L. Okay. So we've got our previous high a day, overnight high. Oops, let's take Friday off of the board. So before Friday appears, we have our previous high a day, overnight high, 4-hour trigger to the upside, overnight low, and previous low a day, which is also the 4-hour trigger to the downside. We also know we have a support, the week flip and the quarter flip, right? And we've got resistance of the 50% of last year up here above previous high a day, and right below previous high a day is the resistance of last quarter's high. So let's see how that plays out, right? Let's just take after hours off to make it a little bit easier to see the chart. And let's go to even down to a 5-minute. How did Friday play out according to the levels that we had, right? So the last, if you remember our list, we have previous high a day, previous low a day, overnight high, overnight low, but we also need the opening print of the current day. Now we can't get that until Friday starts, but Friday starts up here. So we've got our opening print. So we'll just call this OP and we'll leave it peach. So rules are, when price action is above opening print, you're looking at calls. If price action is below opening print, you're looking at puts. Now, preferably, you don't want to just enter willy-nilly as soon as price clears a level, right? Because on this candle, price could always go above, and then the next either in this candle go back below, or in the next candle go back below. So you don't necessarily need to enter as soon as price action gets above that level. You can. I'm not telling you how to trade. A lot of people do enter as soon as price action gets above the level, right? As soon as it gets in, they get in. Now they may have stops that are down here. They may have bigger risk preference, or they may be able to handle more risk than what you would be able to handle. So that may be the reason why they're going to enter on that, because they know they've got a big enough stop that it can pull back some and they can still stay in it. But what you want to look for is some type of higher low above opening print to confirm opening print as being a level of support. So if you're looking to enter at the beginning of the day, you're probably going to have to be down, not just on the 5-minute, but on the 1-minute. So let's just look at on the 5 minute. We had the push down initially. Let's get the other day off the board so it's not even right. So we had the push down initially with the first candle, then the push back above opening print, and it just continued to push, right? So if you were waiting for a higher low, you'd have been left out to dry until this higher low, and then you didn't get much more action after that. So what you would have to do is get down to the 1 minute, right? If we get down to the 1 minute, let's go to the beginning of Friday. Let's look for our higher low, right? So boom, price action opens, goes down, pushes up. Now you get a higher low here, but it's after a lower high. So if you really want to get kind of risky, you could enter here because it's your first higher low. You could say, I'm going with the first higher low. Now it would have worked out for you here, but there's plenty of times, especially on a 1 minute chart, there's a lot of noise on a 1 minute chart. You take that first higher low, you may still get a lower high in comparison to this. You may get a higher high to here, or even an equal high, or even a lower high. You could get the lower higher low here and still get a lower high here and go down, right? So that's why we look for the price action to be above the opening print. So you get the higher low. Now, okay, we're back above opening print. Now let's look for our higher low, and that's what we get right here. Boom. So here's the initially it goes 2 up, but it pulls back, goes below the previous 2, making it a 3 or a bearish engulfer, and it closes. So we know that if price action goes back above this level, that locks this low in as a higher low in comparison to this low, right? This low is higher than this low. So we have the higher low above opening print, and we want to enter calls once price gets above here. Now that's where you want to enter as soon as price action gets above here, especially if you're looking at a 1 minute. There's no 30-second chart. Right? I mean, I guess you can get on like a 1 tick chart or something like that, but especially on a 1 minute, that's where you can get in. So as soon as I'm just thinking back to our trading on Friday. As soon as price action cleared this level, we entered calls, right? And now your first target when you enter calls is going to be one of a few things: either the 4-hour trigger to the upside if you're not already above it, the previous high a day if you're not already above it, and the overnight high if you're not already above it. So in this case, we're not above the overnight high or previous high a day. But we have to keep in mind of other areas of resistance where we could either see a reversal or some sideways price action before continuing higher, right? So that's kind of what we got here. We got the push up, right? So we entered calls here. We got the push to the overnight high. It dropped back down, but then it used last week's 50% as support. It bounced. And then so our next target was previous high a day since we cleared overnight high. And you can see it chopped around. It's had the slow grind, but it could never get past last quarter's high. So once you're in the trade, you don't need to be on the 1 minute. 5 minute it might even be a little too much, because you need to still be looking out for higher lows and lower highs on the 15 minute and things of that nature. But as long as price action is above opening print, then you can remain in your calls, especially if you have good entry points, right? So since we entered down here, not only could we use opening print as a stop, right? We could have stopped out even where we entered, but to give us some room in case there were any pullbacks to test that higher low or whatever, or the last week's 50%. If something wanted to wick through it, we had our stop set down here. So you have the support of last week's 50%. You have the support of overnight high, and combined in with this opening print is the 4-hour trigger to the upside. So that's further support. So as long as it's above those levels, you can remain in the calls, and which is what we did until about the end of the day when we saw, okay, this is like the 4th test of the last quarter high. We're not getting anything. We went ahead and exited once we went 2 down here. So right here we exited. You got your little push up back up at the end, but we got decent profit from down here on the 1 minute to up here. It was like a 30-40 cent move on the underlying with SOXL. That's not much, but just depending on the stock that you're in, it may not take very much to have a high percentage move. You can see here 71 cents was almost 3% move. So we got nice profit from our contracts, and we knew that we could stay in based off of our 4-hour levels, right? We knew where our targets were on our 4-hour levels, and we knew where our support was. The 4-hour levels do roll into the day levels, right? So if we look at our notes, we had our triggers, right? So the trigger here to the downside, well, we didn't go to the downside, to the upside was 25.15 with a magnitude of 25.88. And if we looked on the day, that 25.88, let's go out of here. That 25.88, which was here, would have triggered the two up on the strat, right? It didn't trigger it, but we knew that if it did, then it would trigger, our triggers and targets on the day perspective, right? And if it would have got high enough, it could have triggered something on the week, right? And we have our month and quarter and year, which we talked about earlier in the video, how to set those triggers and targets up based off of the strat reversals. So, coming back into this lower time frame for if you want to scalp and day trade, you can see how these 4-hour markers that we talked about give you precision levels for entries and exits, right? You can also use, once you entered here and we got above overnight high, you can move your stop up and use overnight high as your stop, or just slightly below it, because it's probably going to get tested at some point, right? You could use the last week's 50% as a stop, right? You have these levels to now set up stops and protect the profit that you've made, right? You not only have targets for where you want it to go, but you have levels to where you can set your stops, where you know that if it goes back below this overnight high, then it's probably going to go test this opening print once again, and there's no point in giving up all that, any of that profit from this to your entry down here, right, which was just slightly above opening print. No point in giving all that up. Let's just take it here. Okay, we didn't get all the profit up here, but we still made profit, and that's the name of the game every day, right? Is to walk away with profit. So that's a day trading. That's you just do this over and over every night. You come in and set your levels in the morning. You plot the opening print, and you just go to work, right? So again, a repeatable strategy. Again, this doesn't work for just SOXL. It'll work for any other ticker. I don't know. Let's just look up Apple, right? Let's go to the extended hours, right? So here, let's go to Thinkorswim. Come on now. So this was Friday, so overnight Thursday. Oh, wow, it wasn't very big movement on Apple overnight. But let's go ahead and plot them, right? This was the highest high. So this is the overnight high. Again, a little extra here. We're not charting SOXL. This is a whole another chart. This is Apple, right? So we got our overnight high, and I gotta widen this out a little bit. Overnight low. We'll just call this the overnight low. All right. And we'll make that the low and the low, right? This is just to show you this is still going to work on any chart. So let's go to the 4-hour, take off the extended hours, right? And we can see this is previous high a day. I won't put the 4-hour triggers to the upside and downside just because they overlap on the upside, and we know that there was upside movement. Previous high day. Oops. Edit. Make this solid orange. This one might not be as great of an example with as many targets because it just went off, but it still will give us plenty of triggers. Okay. So we can see opening print was here. Oops. Cancel. This was opening print. So just real quick, let's look at this. Let's go back in on the, we'll just take the 1 minute just because the movement was early on in the morning on Apple. Right, so you can see price action in the morning. This is on a just a 3-minute chart, right? Just to get the small movements that we're talking about for scalps and day trades, right? So you can see we had the push down. Opening print was right here. It's that previous high a day. We got the push down. It went below overnight low. So you could have looked for a lower high here around anything under previous high a day and got in on that to the downside, right? But we never got it. So it did use the overnight low as a kind of a little resistance for a second. There, was a little bit of a fight over it, and then the bulls took over, came up, opening print, overnight high was a little bit of resistance, but you got the higher low here. So then now all you're looking for is once we get back above opening print, we want to look for a higher low. Let's get down to the 1 minute like we did on SOXL. And here on the 1 minute, so you didn't get as lucky with Apple as you did SOXL, right? You would have had to get in a little early, right? If you know your time frame continuity, if it's all to the green to the upside, then you know that it's probably a higher probability that you're going to break above there. There was a lot of news with Apple, so you probably could have entered here. Again, we're just talking about a whole nother stock and just different levels. So you didn't get the higher low here over opening print before you got to the overnight high. So if you wanted to get the full move up, you'd have had to enter on this lower high or this lower high, right? But you still got this overnight high to act as support. And once you got, let's pull out the 5 minute. Come on, Thinkorswim. Once you got the higher low here, all right, so this is low, low, low. And then once this went above, these candles, that locks in this as being a low. This low is higher than this low, and it's above opening print. Should have entered right here. Now, oh gosh, I have some old levels here. This is the 38.2 of the 2024 run-up and pullback fib extension, whatever. That still came into play, right? Either way, it didn't come into play for long because it made another higher low, which again, we entered here. We entered right here. So stops either right here or a little bit below. I always suggest a little bit lower than where you entered, especially if you can use a horizontal level. So I probably would have used overnight high as the horizontal level that I would have used, and I always set my stop a little bit below that. So I would have set my stop a little bit below this 3, which would let you remain in for this higher low, and then it was off to the races for Apple, right? So again, higher low above opening print. In this case, it was above opening print and overnight high. And from there, we wouldn't have as many triggers and targets because we're already past the previous high a day and overnight high. So we wouldn't have any locked in. We'd have to go out to our day chart and 4-hour chart, possibly to, let's see, the 4-hour. Yeah, so we would have had to use past price action as our targets and triggers, which we would have used, if we had notes on those. But it just shows the price action intraday, where you get in, that higher low above opening print, and you're off to the races, right? You got calls, right? So again, this works for any chart. It's not just SOXL. My channel here just happens to talk about SOXL specifically, but that's how you set up those specific entries and exits for precision trading. And again, this is repeatable for any chart, for any time frame. For any short time frame intraday. These levels will work. If you're talking about swing trades and beyond, then we're back to our broadening formations, right? Those types of things, right? We're not going to use overnight highs and overnight lows to enter a week-long trade, right? That's where we're going to come back out and we're going to use our strat levels, right? So we know this 2 down, once price action gets above here, we're going back into calls for the 2 down, 2 up. Magnitude would be here. If it reaches it, the next magnitude would be here. It reached it here and it kept going. It reached this one, kept going, right? So we know where our triggers and targets are. And then if we're talking about scalps and day trades, we've got our levels that we can use for swings and day trades along with the 4-hour markers to give us those precision levels, right? So I hope this video was helpful. If it was, please give it a thumbs up. Leave me a comment. Let me know that it was helpful. If you want me to dive deeper on any of the concepts in here, or I don't know what any dive deeper on anything in this video, just let me know in the comments. I'll be glad to do that in another video. If you don't agree with the video, or you don't agree that this can be applied to any other ticker, then let me know as well. I'd love to have a little conversation and see where this doesn't stack up, because again, I've been using this for years for precision trading, which gives me consistency, right? If it's something that is repeatable, if it's a strategy that's repeatable, that's a winning strategy, right? Overall, right? We have our losses here and there. You have, anything that comes out throughout the day can reverse price action. So there are those things that can go against you, but you have your stops. You know where your risk and rewards are. You're not entering anything under 2 to 1. You want to most likely be in 3 to 1 if you can. 1.5 maybe if you're to 1 if you're doing small scalps and you're loading up on contracts, that type of thing. But as long as your risk to reward is set up using the strats, using strat reversals that have big magnitudes, right? You don't want to just have a strat reversal that's going to get you a couple of cents move or a dollar move if you're in a long-term swing, right? You want to use something that has magnitude. Again, I put the link to the PDF for the strat reversals in the description of this video. If you use all of this and stick to the rules, then you're going to be a consistent trader, right? I've had years of this now where I'm consistent, so I had to put this out there, right? Again, I'm not a YouTube person. I don't even show my face, so I don't really care for whatever, the fanfare or anything like that. I just want to help other people when times can be hard for people at different times of life. And if you've got a little bit of cash to the side, you can use this method to increase that cash, or generate a steady income or a steady revenue flow to add to, even if you have a 40-hour job a week, right? Like if you have got a W-2 job, you can, instead of scalping and day trading, you can use the swings using the method that we talk about with the strat and the broadening formations, to still have precise levels that you can trade without having to stare at the charts every day. So again, I just wanted to spread the word, hopefully help make trading a little bit better for other people. Again, go ahead and give the video a like if you like the video. It's free. We're not asking for any subscriptions, or we're not selling merch, or we're not asking for anything other than the like, and it's just so that we can spread the word and hopefully help other people in their trading as well. So hit the like button, go out there, apply this to as many ticker symbols as you can. And I'd love to be proven wrong that this strategy cannot be applied to any other ticker symbol. If it can, I'd love to know. But do your research, see if this really works. Just watch the charts throughout the day. You don't have to put any trades on. Just watch the flow of price action using these tips that I've provided, and just see how it really plays out. And I'm confident that you'll see that this will work. And then if you do put money behind it, if you stick to the rules and stick to the guidelines, you should make a consistent income, right? So I hope everybody liked it. If not, let me know why you didn't like it in the comments as well. But if you haven't already subscribed, go ahead and subscribe to the channel. Make sure you hit that notification bell. This is just a bonus video. Like I said, we usually do 6 a week. This will be a 7th video this week. So have that notification button hit so that you get notified when we do release these bonus videos. And I look forward to releasing the weekend video tomorrow, where we recap last week's price action and then set up our triggers and targets for the week ahead. So hope everybody enjoys the rest of your day wherever you are, and good luck trading.